right, the stock which is on our radar right now is M&M Financial. We have seen some improvement in asset quality for the NBFC. The key highlight was the fact that loan growth was at an 11-quarter high. Ramesh Iyer, the Vice Chairman and MD of M&M Financial, joins us now. Mr. Iyer, thanks so much for joining in. Let me start by asking you, what led to such a strong disbursal growth? Because it comes at a time when the other NBFCs have seen a decline in their dispersal, whether you look at it year on year or QOQ.
So we've been repeatedly saying, one is of course our deeper penetration, second is our multi-product approach, which is we work with all the OEMs, and three is we spread across the country, we have spread, and fourth is of course we have our own large existing customer base who either are taking vehicle or referring us to more customers. So I would think if you look at all the four would have contributed to a little of everything for us to be able to maintain these kind of disbursements.
Well, Mr. Iyer, your loan growth is at one of its highest we've seen in the last 3 years. How do you see the run rate sustaining going ahead?
So again, we are an enabler, and you'll quickly realize that it's based on what's the volume that the OEMs have. But we have been gaining a little market share, and our commercial vehicle construction equipment base has been low the previous years, so that's our growth engine. And the third is the pre-owned vehicle, where we have now become a substantial player in the rural market. So I don't think maintaining a 20-25% growth at least from here on is a very big challenge, and we have said this before. But of course one has to always remember that the financiers volumes is based on the OEM's volume. But we are confident, given our multi-product approach, maintaining that level of growth should not be a challenge.
Okay, any guidance on the net interest margins and even the asset quality ahead?
So I would think that whatever was to be the increase in the borrowing cost has already come in. And if any, one would only see maybe over a period of time decline in the borrowing cost could happen. Again, while our borrowing cost has gone up upward of 50-60 basis points, and we've not kind of passed on all of that to consumer, nor have we absorbed the whole thing. So it's been decently shared between us, the OEMs, the dealers, and a small portion has also been passed on to consumer, which is what has helped us retain our margin. So we don't see going forward a margin pressure. Second is, the outcome of a net interest margin is also a product mix outcome. So when we do a little more of pre-owned vehicle, one would see improvement to margins happen. So we don't really see any pressure on margins even going forward.
Well, sir, despite the improvement in the gross NPAs, the provisions declined quarter on quarter by around 30%. Why have provisions come down this time around?
So if you kind of look at, now the provisions are in three buckets that happen. Bucket 1, 2 and the third bucket. And the third bucket decline would one normally see, because we have also moved some to the bad debts where we would have made almost the full provision, or where the contract would have fully matured. And that's the only reason one would see that kind of a decline. But as we go to the fourth quarter, one would again see that the coverage ratio would possibly be maintained even if the gross NPA keeps coming down.
Okay, thank you very much for joining in. So that's M&M Financial, strong growth seen in the disbursements. They don't see any pressure in their borrowing costs going ahead as well. For the markets, there has been a bit of a pickup, at least on the bench, at least at the index level. So from, say, in the last 10 minutes or so, the Nifty has seen an improvement of close to about 30-odd points. It was hovering around the 10,670 mark. Now we're making our way towards the 10,700 mark. Let's quickly tell you some of the stocks which have moved up. Keep your eye out on GAIL. More than that, actually, UPL. That's one up close to about 1% You can see some green on Tata Motors from the low point of the day. So Tata Motors has recovered a tad bit. So net as we speak, the Nifty is down close to about 85 points at the 10,700 level. From Friday's peak level of 10,931, the index is down close to about 230 points. That's the extent of market meltdown that we've seen. And the problem is in the broader markets, where the mid-cap index is down 1.7%. The advanced decline ratio is one stock in the green for 3 in the red.